Welcome back to studio. My name is Werimu Jenga. I take you through the day's business news. Central Bank of Kenya has dismissed claims of currency manipulation, attributing the shilling stability to targeted policy interventions and prudent monetary management. CBK Governor Kamau Thugge says a strong balance of payments, solid export base and capital inflows are some of the factors supporting Kenya's unit, which has hovered around 129 shillings to the dollar for months now, despite worsening global geopolitics. Kenya's economy continues to demonstrate resilience, with the shilling remaining relatively stable against the US dollar in recent months, despite ongoing global markets and currency volatility. In the last 7 months, the shilling has been trading at 129 to the dollar, despite the ongoing global trade war between the US and leading economic powers like China and the European Union. Central Bank of Kenya Governor Dr. Kamau Thugge attributes the stabilization of the exchange rate to deliberate policy measures and improved overall balance of payments.
Very good performance in terms of exports. We've had good performance in terms of travel receipts, and we've had good performance in the current account. So I think taking all that into account, you feel that there's no need for a stronger shilling, and there's no need for a weaker shilling. I think we're just at the right place.
Thugge says the recently imposed 10% reciprocal tariff by the United States will have minimal impact on the Kenyan economy, though exports to the US are likely to drop by close to $100 million.
It's still relatively small compared to, of course, our GDP. Our GDP is north of $122 billion. So I do think that the impact of the higher tariffs on the economy will be muted by the expansion on the aggregate demand side, whether it's the private sector increase in both consumption and investment.
On the domestic front, the governor expressed concerns over the rising level of non-performing loans, which now stands at 17.2%, urging commercial banks to increase lending to the private sector.
I think that process of getting rid of the real sector pending bills should also have an impact on the NPLs, because some of the NPLs are actually in the construction sector.
The CBK governor further says National Treasury and the International Monetary Fund are negotiating a loan facility with Kenya to ease supply-side pressures. On the state of the domestic banking market, CBK says it is conducting on-site inspections on risk-based pricing for all commercial lenders in the country with mixed results.